Hey guys, it's Shauna the Tax Goddess, and I think you guys know, you've been on our channel for a while, Tax Goddess focuses on business owners and entrepreneurs. So with the pandemic going on, COVID-19, yay for 2020, today we're going to be covering some of the top ideas for business income tax planning that can help you reduce your taxes, keep more of that cash in your pocket. Hey guys, Shauna the Tax Goddess here. If you'd like to learn how Tax Goddess helps 6, 7, and 8-figure entrepreneurs reduce their taxes, keep their wealth, grow their wealth, save millions of dollars on major deals, stick around, or of course, go to taxgoddess.com. You can book an appointment to speak directly with me. Now, today I want to get into some of the top ideas for business planning, business income tax planning, during the pandemic. Of course, we're here to help you try to keep cash in your pocket. So number one, if you guys are an accounts receivable business, an accrual business where you have accounts receivable, you're actually tracking those accounts receivables on your tax return. That means typically you're an accrual business, okay, for tax purposes, not cash, accrual. What I want you to be doing is examining all those business receivables. Do you have any that are not going to get paid? Have any of your clients gone out of business? Do you have any potential write-offs in your accounts receivable bucket? Now, number two, if you are one of the companies that are required to record inventory, okay? Now, typically this is companies over $25 million in gross receipts, but if you are one of the companies that is required to value your inventory, take a look at your valuation of the actual inventory. Can you switch the valuation to the lower of cost or market method for valuing your inventory? At this point, your inventory might be worth a lot less, so you might be able to get quite a significant deduction by switching your inventory method, okay? Now, corporations, if you're a C corporation, you can apply for a refund of excess 2019 estimated taxes before the 2019 tax return is filed, okay? Now, I know we're coming up on the filing deadline. That's about a month and a half out, maybe 2.5 months, depending on your calendar year for C corporations. But if you haven't filed your 2019 taxes yet, and you've got way too much estimated taxes in there into the government, you can apply for a refund. It's form 4466. 4466 is the corporation application for a quick refund of overpayment of estimated tax. Very creative name, IRS, but hey, it works, okay? So if you are a C corporation, an 1120, you file form 1120, this might be able to get you some cash back, sorely needed cash right now. Now the next one, depreciate idle equipment, okay? Depreciation is allowed on assets that are temporarily idle. So not things that you've actually put on the shelf and you're never going to use again, but if they're temporarily idle, they're sitting around because you don't have the staff, you can't bring people back to work on them, you can continue to depreciate. And of course, depreciation under this rule continues until the property is either abandoned or disposed of, otherwise disposed. So you might also want to look at your equipment and see if there's any assets that you actually need to just get off the books. They're old, they're not good anymore, you're not actually going to be able to use them for any purpose. Look at your equipment lists. Now, the next one, an ordinary deduction for worthless stock of a subsidiary. This could be big. So if you're a corporation, any kind of entity, and you have an affiliated entity, so typically a subsidiary entity, if that entity has become worthless, you might be able to get an ordinary deduction for worthless stock. Basically, the company's gone out of business. You might be able to get a deduction for that. That's kind of a specialty one, so make sure that you reach out to your CPA, to your tax strategist, so that you are getting how to do it, when to do it, what forms you have to file, those kinds of details, all right? This is just an overview, guys, just an overview. But if you have a subsidiary that has gone worthless, this is definitely something that you want to check into. Next one, ensure adequate stock and debt basis in S corporations and partnerships, okay? There is so much knowledge, no way we're going to cover it in a video of this length, of this size, this overview type video. But because of the CARES Act, there's a lot of items that increase deductions and potential for tax refunds of taxes paid okay? But those things are going to impact your stock and potentially your debt basis. So NOL, depreciation provisions, you've got, some of these specialty provisions for partnerships and S corporations. But in order to get those deductions to actually flow through to the shareholders that own the partnership and own the S corporation, you have to have basis, okay? And that, depending on whether you're a partnership or an S corp, that could be stock basis or debt basis. So take a look with your CPA or your tax strategist. Do you have basis adequate to take all of these new deductions? Because if you don't, those deductions, even though you got the deduction at the company level, they might not actually help you as the owner, as the flow through, the person that owns the company, okay? It's very, very specific, and the rules are very detailed. So again, talk to your CPA, talk to your tax strategist if you're making a lot of these changes due to the CARES Act, okay? Now, consider an automatic change in accounting method to reduce your taxable income, okay? One of the major changes that actually happened in 2018, it was RevProc, Revenue Procedure 2018-31, was that you now have an updated ability to change your accounting method for certain things, okay? Previous to 2018, you used to have to track inventory and what was called a 263A adjustment if your gross income was $10,000 on average or more. That's now been bumped to 25 million or more. Okay, so 10 million to 25 million, that has now been bumped. So you might be able to go back in and redo your tax returns, change your tax returns, look at 2019 tax returns, see if any of these automatic changes are actually going to help you reduce your taxable income. So that could be treatment of prepaid expenses, treatment of accrued compensation, treatment of advanced payments that have been received, reviewing the class lives for depreciation, okay? Guys, I don't normally like to talk tax nerd language, okay? But this video might be one of those videos where if any of these words are triggering for you, you actually want to take this video and show it to your CPA, okay? Because if your CPA is not bringing this up, well, do I want to say that's okay? I don't know. Your CPA should be bringing this stuff up to you. But remember, guys, I'm a tax strategist. This is my specialty, is to look for this stuff, right? And to bring this knowledge to you guys, all right? So talk to your CPA. Of course, you can always talk to your tax strategist anytime. Now, a couple of other last little points. If anybody has it, consider repatriating excess cash from foreign corporations. Again, a very specific code. So if you have a foreign corporation, leave a comment down below, reach out to us. We'd be happy to discuss that with you. And of course, reevaluate transfer pricing agreements. Foreign subsidiaries, again, we're kind of in that foreign range. So if anybody has a foreign subsidiary, a foreign affiliated company, definitely take a look at those, all right? Last little bit here on the foreign. Consider using an IC disc. It's the actual letters, IC-DISC, IC disc, to minimize your tax on exports. Okay, so this is really good for exporting goods directly that are being manufactured by the same company, providing architectural or engineering services that are conducted in the U.S. but for a project built outside the U.S., okay? And or manufacturing goods that are included in a product exported by somebody else. Okay, so it's really about manufacturing or, of course, architectural or engineering services. All right, so guys, the major takeaway here, all right, there are 1,000,001 ways, which you guys know because you watch our channel. There's 1,000,001 ways to reduce your taxes. Reach out to your CPA. Ask them what you can do, okay? If they don't know or that's not their specialty, you know where to find us, all right? Tax reduction is the specialty for Tax Goddess. This year, we are now at 312 million and counting here in 2020 as far as tax savings for our clients. So if you want to reduce your taxes, reach out, say hi, leave a comment, join our Facebook group, Tax Strategies That Save Entrepreneurs Thousands. Yeah, I could keep talking. It's tax strategies. It's my passion. So if you guys have any questions, reach out, leave a comment, send us an email, go to taxgoddess.com and book an appointment. We'd love to help you guys save some tax. So, hey guys, it's Shauna the Tax Goddess here. Thank you so much for being a part of our Tax Goddess family. Number one, subscribe to our channel and make sure that you click the notification bell. That way you'll get all of our new videos when they come out. Number 2, if you're not sure where to start, but you want to come learn from my team and I and other like-minded business owners, join our Facebook group. That is Tax Goddess-Tax Strategies that save entrepreneurs thousands. So definitely check it out. We answer Q&A there all day long, host special Facebook Lives, that kind of thing. Now, number 3, if you want some help right now, you have a burning issue, you have a major tax bill to pay, you didn't do any planning, you need some planning, you have a pending deal that's going to happen and you want that planning in advance, go to taxgoddess.com. You can book an appointment to speak directly with me or someone else on our professional team to chat about your situation, see what's going on, see how Tax Goddess can help you. So again, thank you so much for being a part of the Tax Goddess family, and I can't wait to chat with you. All right, bye.